Hello, good afternoon, and thanks everybody here for joining us. And I'm John Ramstead with Hangar X Studios, and I'll be moderating today's XTI Aerospace's Town Hall. So we appreciate everyone taking the time to participate. Today's call is intended to really expand on the themes outlined in our recent shareholder letter that we sent out and to provide some additional context around the company's strategic direction and our execution priorities. So before we begin, I'd like to briefly call your attention. You'll see here on slide 2 some disclaimers we got to put up here. And this contains XTI's safe harbor statement. We'll have it up here in a second. Today's discussion may include some forward-looking statements that involve some risks and some uncertainties, and actual results may differ materially. So please refer to the company's filings with the SEC for a more complete discussion of these risks. So our discussion this afternoon is going to focus on a deeper dive on drone nerds and how this acquisition has completely reshaped XTI. So first, we're going to be talking about how drone nerds' proven unmanned aircraft systems capabilities, deep customer relationships, and platform aligned with national priorities around security, resilience, and advanced aerospace technology support XTI's growth objectives. Second of all, today, we're going to talk about the scope of the drone market and competitive advantages XTI has now and intends to build on going forward. Third, today we're going to have a recap of XTI's financial status and plans for some disciplined financial management going forward. And fourth, we're going to be really diving into the UAS growth roadmap, including plans to expand its current government footprint, reach further into defense and national security applications. And so with that also, please, the Q&A is live. If you have any questions at all during this, put them in there. Our team is gathering those. We're going to, at the end of this, we're going to probably spend, I don't know, between 20 and 30 minutes going through this. And we've left a good half hour to address and answer your questions. So with that, I'm going to turn this over to XTI Aerospace's chairman and CEO, good friend of mine, Scott Pomeroy, to begin today's discussion. So Scott, I'll turn this over to you.
Great. Thanks, John. Well, first of all, let me express my gratitude for everyone who's joined us this afternoon. I know this is the end of a long day for many of you. I'm hoping that this is valuable time for you as we open up and talk a little bit more, as John just talked about. About 2 weeks ago or so, I sent out a letter to shareholders and talked to the importance of the drone nerd acquisition, why it mattered, why we did it, what it was all about. And today I hope to unpack that a little bit more for you and also provide some financial context. And as John indicated, we really are interested in the Q&A. So we'll be leaving a significant amount of time at the end for you, and we really want to hear from you from questions, and we'll leave the time for that. First and foremost, as I noted in my letter to shareholders, the importance of leadership and securing the leadership from Jeremy Schneiderman and Alex and the team at Drone Nerds was important to us. And with Jeremy's addition to the senior team, we really have rounded out the team. We spent a lot of time in 25 making sure we put the right folks in place. The backgrounds are varied and significant as we look at the next phase of the company. Deep drone experience. We also have autonomous flight engineering capability, M&A and operations, in particular around scalable businesses, and manufacturing and aerospace, particularly in the tech and software arena. This team is very well positioned to move into the next phase. As I noted, the acquisition of Drone Nerds in November was truly defining for us. It's changed our focus, our priorities, and our resource allocation. As noted, we were built on VTOL, expertise. But what does that really mean? Well, what it really means at the end of the day is that it's embedded in our DNA, the element of vertical flight. Whether that's design, development, manufacturing, we have the DNA of vertical. Now, the foundation of all things vertical is drones. It's the ultimate in vertical flight. It's really autonomous flight on a spectrum of payload, speed, and range. So for us, this was a very natural, very logical step, given the current and developing drone marketplace. It gave us market relevance today, revenue and profitability today, significant growth opportunity today. And now we find ourselves operating the leading drone platform in the United States. So what does that really mean? Well, first of all, I'd start with the fact that it positions us at the nexus between OEMs and customers, an important integrator role that I'll speak to consistently throughout the next few minutes as I highlight the real market position that Drone Nerds enjoys. We are in the exalted position of evaluating drone solutions and bringing those solutions to the customers based on their articulated missional need and objective. It involves a number of elements that I'll get into when I talk about the business model. But suffice it to say, we have a very unique position that we occupy in the marketplace today as value is increasingly shifting to outcomes away from just simple manufactured hardware. As a consequence of that, we've established a flywheel, or it's been established, between hardware and high margin, sticky, sustainable services revenue. That flywheel is really powered by our dominant scale, our expertise, and our longevity in an increasingly fragmented market. That scale of our platform has really positioned us to consolidate effectively. And we are in a good position to look at this, be very discriminating and looking at verticals, geographies, and various technologies that are evolving, meeting customer needs that we are uniquely aware of. Again, this notion of somewhat agnostic approach to the market with drone solutions positions us well as the military is increasingly looking for commercial solutions to incorporate into a military use case. And we have a unique position as well as a unique insights into what the market is currently capable of and what's coming from an innovation standpoint. And of course, all of this is wrapped in financial discipline. And transformations like this demand a disciplined cost structure, focused management of cash flow, effective forecasting and understanding of your business, really bringing together the notions of austerity and growth, understanding the natural tensions that lie between those two positions. I guess my message here today is that the transformation is well underway. In evaluating the drone enterprise market, let's begin by looking at the current competitive landscape. Now, number one, it's probably a lot of names here that you don't recognize, first and foremost. But you've got the supply chain that begets the OEM or manufacturing that ultimately finds itself in the sales channel and aftermarket support. That's your entire landscape of the drone ecosystem today. We've come a long way since the hobbyist market, as you see increasingly the number of participants that are entering the market. But what defines some of these areas? On the supply chain side, it's largely foreign in nature. Few of the exceptions are noted here. One who's been our partner on the financing side, Unusual Machines, has done a nice job of establishing itself as a leader in the supply chain business, even in the aftermath of the drone dominance. Appointments here recently, Unusual Machines stands ready to benefit from some of the evolving military sales that are going on. But there are very few US-based participants. It's largely foreign in nature. They enjoy no real scale today. They're rapidly growing, but are also burdened by regulatory overhang in all of those cases. The OEMs, what I point out there is, first and foremost, again, foreign dominated. The US is, while we aspire to dominance in the US, the reality is we find ourselves far behind foreign OEM providers today, to highlight the Chinese in particular, whether it's DJI or Autel. They have had a historic, significant advantage, and we are in a position of trying to play catch up here in the US. So we've got foreign dominance, we've got supply chain dependencies, channel reliant. One of the elements that defines the manufacturing channel is that in very few cases, the OEMs have direct relationship with the customers. They operate through intermediaries like a Drone Nerds. They are single product oriented and focused in large measure, highly fragmented, and also regulatorily burdened. That's really the definition of the state of manufacturing today. Then I get to enterprise solutions, which is where Drone Nerds plays today. And as a dominant leader in the space, we enjoy a significant position at a national level across the country and bring to our customers solutions in a very, what you'll probably note is undercompeted segment of the market. We bring innovation and extension of our knowledge and education of the customer base. The sale tends to be consultative. in nature. And then aftermarket support. It's the consequence of a solutions-based go-to-market strategy. When we talk to our customers, it's not just about the solution, it's about how do I support that solution? How do I bring about the aftermarket support of that fleet? How do I ensure maximal fleet uptime, et cetera? So as I look at this and I look at the evolving ecosystem, really we are at a point in time where value is beginning to migrate from customer-owned outcomes away from manufacturer-driven products. So global drone adoption is accelerating. I think we can all agree with that. As enterprises and governments move away from experimentation to scalable deployment. Again, we've come a long way from the hobbyist market that we knew, and we're now seeing drones in almost every facet of life today. It's one of the things we see at Drone Nerds in particular, as we solve problems with drone technology. As the largest enterprise solution provider, one of the things of note is that we occupy only 1.5% of the market. You know, I did a little bit of math here as I was contemplating the growth chart, and if we merely held serve relative to our current market share, we would be at 2.4 billion in revenue by the end of 2034. So market growth is significant. It's accelerating, but I will consistently argue that durable value is going to be harnessed by those who harness integration, compliance, and outcomes on behalf of customers. So I've made the point, and I'll break this down a little bit further, that the OEM landscape is highly fragmented. You've got dozens of manufacturers competing across narrow forms, factors, and use cases, hardware first, and relying on indirect channels. So from a regulatory standpoint, disrupted, and all of that fragmentation leads to a lack of enterprise scale optionality. But when you look at where the winners are going to come from, and as the market matures, fragmentation shifts the value away from manufacturers to integrators that can unify platforms into scalable solutions. And that's really what we've looked to do at Drone Nerds with our end-to-end solutions. The lifecycle support is critical to our ultimate value proposition. We're optimizing for the mission, not for the model. And as the drone market's transitioning from hardware-led experimentation to enterprise scale deployment, with the value is shifting from OEMs to integrators that are integrating, providing compliance information, and operational outcomes. So where do we play? Where do we win at Drone Nerds? This slide provides a very succinct summary of that question. We are the integrator, whether it's aircraft accessories, it's evaluation of payloads, it's looking at software, fleet management, or aftermarket service and repair. There's a virtuous cycle, insights that moves from OEM to customer and back through Drone Nerds as that intermediary, that integrator that sits at the nexus, capturing value as we interface with customers, bringing solutions that solve the problems that they have brought to us. Okay, so as I promised, what does all of this mean financially? How should you think about us as we go through this financial transition? What does the strategic shift mean when it comes to revenue, profitability, cash flow, capital plan? We tried to capture that here in one slide. We're coming out today and providing guidance that in 26, we will be looking at 160 million in revenue or better. That's a 30% increase over 25 or more. Our burn will move from a negative roughly 3 million that you've heard me talk about in the past for the aircraft program to over almost 2 million positive. Our head count will stay relatively stable post Drone Nerds transaction, and we expect to end the year around the same cash flow as we started the year. So ultimately what that translates to is monthly cash flow, positive monthly cash flow being achieved by end of year, and no capital raises for working capital for the company. From a sources and uses of cash, what does that look like? So a couple of highlights here. This is a low CapEx business. You don't have any meaningful CapEx that will be expended over the coming year. The debt service that's noted here is really a function of the transaction debt that we incurred. That debt will be paid off by the end of 26, and we will be left only with ABL facility. This chart also notes that as a consequence of the transaction, with Drone Nerds, we funded out of equity. We covered the ABL that had been in place by a previous bank. We needed more flexible terms with a larger bank, and that is virtually the term sheet is in hand, the definitive agreement's mostly negotiated, and we expect that to be completed here soon. From a capitalization standpoint, this is our effort to be truly transparent with you. This has all been available publicly, but as I published in my letter, and we've reiterated here, we wanted to make this easy for you. This is we sit today at about 34.5 million shares outstanding. You see the pre-funded warrants that were issued to UMAC as part of the transaction. Class B units, by the way, they are exchangeable 1-for-1, and they are the units that were issued to the Drone Nerds ownership as a consequence of the transaction. And then you see the warrant and option shares at the various weighted average prices there. How are we going to achieve the growth plan? Well, first and foremost, a holding share. Just to put it into context, half of our planned growth comes from just holding share. Additional growth for us comes from a focus on both organic and M&A. As I indicated, we've got a perfect platform for tuck-ins and for using this as a buy and build in the areas of expanding our verticals, expanding our geographies. This is a team knows the opportunities for us very well, and we will be looking at those in the coming weeks and months. From an organic standpoint, you've already seen that we've been out there with a number of different product additions to our baseline products. We're constantly looking at the mixes. One of the benefits of being the largest in the industry is we can be very discerning about our products that come into our product line. It's a very rigorous process, and we say no to many more than we say yes to get into the mix. It is a privilege for OEMs when they find their way into the channel that Drone Nerds manages on their behalf, and we're constantly looking at the mix. The verticals are always moving and shifting. So we whether it's public safety or agriculture or infrastructure, et cetera, we're constantly looking at opportunities in verticals. As I noted earlier, this is a constant evolution. Customers bringing to us opportunities. We in turn take those opportunities to various OEMs and bring a solution back. Sales team expansion. We'll be evaluating and looking at evolving the capabilities of the sales team, as any good organization is always, sales organization is doing. And then on the services side, on the M&A, we've got tremendous opportunities in underserved opportunities like extended warranty services. The company currently doesn't offer any finance plans for customers. There are great opportunities there for us as well. Finally, when it comes to opportunities with regard to the military, the largest customer, I would argue, out there is the U.S. federal government. So where are we there? Ask that question a fair amount. I mentioned this notion that we have a great visibility into the full spectrum of opportunities that are out there in the OEM world. The military has come out and said they are increasingly interested in what they call COTS, or commercial off-the-shelf products. They want to incorporate market or commercial-based products and adapt them for military usage. Because of our visibility into the entire ethos and landscape that's out there, we provide an extraordinary opportunity for the military to work with us on Group 1 through Group 3 opportunities that they may be looking for from a COTS standpoint. So I would expect more to come from us on all of that. Okay, in wrapping it up, I think we can all agree the market's large, it's growing, and it's fragmented. The OEMs and the value is shifting from hardware to solutions. Enterprises and government customers need trusted partners to integrate, operate, and future-proof their drone program as tech and regulations evolve. Finally, companies that own those customer relationships fulfill that integration role, focus on outcomes for the customer, are positioned well to take advantage of this shifting value. Finally, what I would say is the future's unlimited for XTI at this point. With a healthy outlook on revenue, cash flow, and costs, with opportunities that exist in the area of both growth through acquisition as well as organic growth, taking our current leadership position and expanding that to ensure dominance in the role of enterprise solutions, We are in a great position as we lean into 26 and beyond. We're excited about the future, excited about what this transition means for us, and really invite you as investors or potential investors to give us a really good hard look. Okay, John, over to you.
All right. Hey, thank you, everybody. The questions have been coming in quickly, and we're here to answer your questions. So please, in the Q&A, you can answer a question there. Or also in the meeting chat, there's an option that goes to hosts and panelists, and Scott and I can see those, and we're going to be pulling those in. So please add your questions here. We're going to get to everything that we can, and whatever we can't get to, we're gonna end right on time here today. But anything we don't get to, we'll be sending something else out and answering all those questions. So Scott, I'm going to kind of put this one here together because there was a number of questions that came in around this topic. It's that you mentioned more than 160 million in revenue for 2026 from that $110 million number. So what are the key assumptions behind the growth, and what gives you confidence you can deliver against that?
Well, the key assumptions are around looking at the business today, the current pace of our sales process, the nature, the mix, and the makeup of the revenue. We've got a good launching point coming out of 25. The growth is, while significant, not extraordinary in our opinion. So we have been able to hold share. This is a business that's not nascent, right? We have been around a long time and have been in this position and growing for a long time. So when we look at some of the changes being made, the acquisition opportunities, we haven't really broken down the nature of the growth percentage, but a reasonable percentage will come through acquisition, but most of that is still organic in nature, and it stems from the expansion into various verticals that we have got we've invested in. We've got the sales channel beefed up for, and we're focused on as a business. So this is a bottoms-up build. This is what our team believes can be done, and so this isn't ethereal pie in the sky. This is a classic rigid process of building budgeted perspective of revenue growth.
Awesome. And Scott, here's a question that comes from from Phil, sorry. Does Drone Nerds currently have any offerings around drones as a service, drones in a box? And if so, what verticals are they in? And if not, is that an area of future expansion?
Yes, fabulous question. Today, drones as a service, drones in a box, neither one of those are offerings that Drone Nerds provides. They are definitely areas of growth. We have a small investment in a drones in a box company that Drone Nerds made some time ago. In anticipation of this evolving area, we are probably at that inflection point now where it's going to gain some legs. The perspective of Jeremy and the team was the market wasn't quite ready, but that has really evolved at this point to where we believe drones as a service and drones in a box are something that you will likely see us forge into in the coming months.
All right. Next one here is from Randall. He asks, did XTI or Drone Nerds submit to phase 1 of the DoD Drone Dominance Program competition that was recently announced? And if not, why not?
We did. We did put forth several potential options. We were not down selected as part of that process. So it's something that we are going through the debrief and postmortem on that now, understanding why not. But expect us to be in phase 2. Expect us to be very active in any of the drone dominance programs that are out there.
Okay, and then next one from Brent. Looking at the financials from Drone Nerds, they posted strong gross margins in recent quarters. I was wondering how sustainable those margins are as volume scales, especially if DJI access tightens and domestic sourcing becomes more important.
Well, I would suggest that we're not giving guidance on margins at the moment, but let me provide a little color. DJI is part of our lineup of solutions that we provide to our customers. We typically will provide multiple options and we work with our customers to select the option that meets the missional need best at the best cost, the most effective cost price point. In DJI's case, you can imagine from their size globally, they occupy a pretty substantial portion of our business that we do today. They probably have the tightest margin constriction just because of their size. So when you move away from some of the large dominant players in your portfolio, one could expect the margins to loosen and improve because your larger dominating OEMs are going to have more influence. Now, because of our relationship with customers, because of the service offerings that we bring, we actually have more leverage given our scale and pricing leverage than the average company would have. So we enjoy a little bit better position, but a good mix as we shift into more US-based OEMs likely improves our position over time.
All right, Scott, here's a good question from Frank. He's just talking about cash flow. You mentioned moving from negative 3.8 million a month up to a positive 1.9 by the end of 26. Can you explain some of the key drivers and timeline for break even?
Yeah, I'd like to stay away from exact timelines right now, but some of the key drivers are, number one, you noted that we sold off our Inpiction business this morning. We made that announcement. That was a very intentional move. That eliminated a significant burn rate for the company. We've reimagined the entire cost structure of the historic legacy aircraft business as we look at other strategic opportunities for us with that piece of the business. That saw us move on headcount, on eliminating positions and streamlining the business. It's a complete realignment of the cost structure to meet the needs of the revenue, and it's been an effective means of re-looking at the business. By the way, part of that is also the fact that we're not having to go to the market and raise capital on a consistent basis. That's expensive money, and so from a professional services standpoint, it's costs we don't have to incur. And that we've historically had to incur. So it's a myriad of things, all built. We worked very hard as a team to pivot very quickly to address those cost concerns and consideration. So we feel very good about our forecast there, but I'll stay away from exactly when that flips and turns.
All right, perfect. Then a couple of questions here, Scott, on the TriFan and this pivot. So the first one comes from Donald. Just what's the status of the XTI TriFan 600 program, customer reservations, and then another similar question was how many of those total employees are dedicated currently to TriFan development?
So the TriFan is, as I indicated, we're reimagining we've reimagined the cost structure while we go through a strategic evaluation of the business. So it's preservation of the IP and its future. We're looking at that. We'll have more to say about that in the future, but it's really about ensuring we can find a way to align the development of that business with the appropriate capital structure that it has. So we'll look at a number of different alternatives with the business, and when we're comfortable and confident, as to what the direction is, we'll have more to say about that. But for the time being, it is effectively been put on a diet, significant cost diet, and while we go through that evaluation process.
Right. And here's kind of a follow-up to that from Bruce. He said, I invested in XTI based on the VTOL prototype and strategy. You kind of answered part of this, but are you abandoning that strategy and should I be concerned? So I think this might be a lot of questions around this, Scott. So maybe you can just kind of, put a little more color on that.
Yeah. Look, we believe in we believe in the whole vertical space. As I said, the drone drones are foundational to that. There are ways in which we can leverage our engineering capability that bring opportunities in the drone space to our Drone Nerds platform in the way of engineering and development of potential aircraft, in particular for the military and others, that will ultimately benefit the long-term benefit the aircraft. But right now, the focus of the business is on where we can generate the significant value for shareholders, and that's a longer-term proposition that really demands a longer-term strategy for it.
All right, perfect. And this one comes from Kathy. She asks, how unique and defensible is the Drone Nerds enterprise platform if major OEMs decide to sell directly in enterprise and government customers? And who are the main competitors to you now in the drone business?
Well, the interesting thing is that from a competitor standpoint, we have very few, really, if any, that have the broad-based, truly full agnostic approach to the market that we do. You've got some vertical players, like in the area of agriculture or in the area of public safety, for instance, that might have some penetration in those specific verticals. But when you look at verticals writ large, nobody really has the positional power that we do across a wide spectrum of solutions that customers are looking for. So it's really an exalted position for us to have, and a position of leadership and dominance that Drone Nerds has enjoyed, and it gives us such a wide swath of exposure to the broad market. As it relates to OEMs and whether they chose to start going direct, part of why they haven't and why I don't think they will is the complexity of the solution. Building a sales channel that's consultative in nature is both expensive and complicated. You're bringing solutions, and I think as I outlined the business model before, it's not just about the hardware the configuration that you're bringing to the market. It's about the software. It's about the aftermarket support. It's about all phases. When our customers come to us, they want to know how am I going to keep the fleet active and in service? How are you going to replace drones that go down on me? How are you going to move through repair and maintenance? In some cases, we've got a mix of product that's solving the problem. So we're solving an overall missional objective, and an OEM is solving a single product objective, and that's why they've chosen not to go direct. Could they in the future? Sure. I would advise against it just because of the proposition. We're getting the benefit of scale as we build this sales organization.
Yeah, awesome. And to kind of maybe follow up on that, follow-up question from Brent. He said in the shareholder letter that you recently released, you said capital and focus are shifting toward Drone Nerds. Can you clarify what percentage of XTI's operating budget and management attention is now directed toward Drone Nerds versus VTOL over the next 12 to 24 months?
Look, other than to reiterate what I've said, is that our focus is on the revenue generating capability of the drone business. I probably am not going to go into a breakdown of how many people do what. Suffice it to say that when I'm saying our priorities are focused on the revenue generating capability, it's not a stretch to say, to the extent we're successful with drones, we create a strong revenue stream and a profitability stream to look at other opportunities within the portfolio. And that's what we're focused on, is looking to be able to fund some of these opportunities out of our current operations without having to go to the market for working capital.
Yeah, and here's a question from Rex. He said, outside of Drone Nerds and the acquisition strategy there, are there other acquisitions that XTI is looking at?
Many and varied would be my answer.
Okay, many and varied. All right, let's go to and this is from I think it's Dai Lu. Any planned actions to restore shareholder confidence, address dilution concerns, such as renew commitments to buybacks, reduced future equity raises, or other value accretive steps, Scott?
Yeah, so good question. Obviously, there's it's no secret. There's a history here of how we've raised capital. Part of sharing some of the guidance here is to provide insight into the fact that our days of coming to the market to raise money for working capital, um, you know, are there circumstances where we might? I'm loath to say absolutely never, but under my watch, that would be a very, very high bar for us to look at. If we're looking to the market for anything at this point, it's going to be around accretive acquisitions. And part of providing the guidance around cash flow and the capital markets that we did, or our capital strategy that we did, is to provide shareholders some comfort that we're not going to be raising money for working capital.
Okay, perfect. This next question, Scott, comes from Carol. She said, "You mentioned Drone Nerds is not a product company, but a platform. Can you please elaborate?"
So as a platform, we represent product alternatives. I kind of think of us as the last mile for the benefit of customers. We're looking at all of the intricate technologies, capabilities, whether it's the hardware platform, whether it's the derivative ancillary payload in the form of sensors or cameras or whatever that payload might be. We help the customer put those pieces together to solve their issue that they've presented to us. They come to us with a missional need and objective. We then bring the right mix of hardware, software, flight controls, and ultimately wrap around that a fleet management program, a service and repair program, a replacement program, whatever it might be that is of particular interest or need to the customers. That's really outside the scope and purview of a single product. The OEMs tend to focus on hardware that they produce, or sensors that they produce, or camera technology that they produce. We take and operationalize those products.
All right, let's see here. Next question here, and this is from Kurt. How does NDAA compliance and recent FCC-related restrictions on foreign drones translate into a sustainable competitive advantage rather than a temporary tailwind or drag on the drone business overall?
Great question. So the more regulatorily burdened the industry becomes, the more relevant and important we are. Is a simple statement. Because we have to help our customers navigate that compliance factor, whether it's NDAA compliance specifically, whether these components are Blue List compliant. The average customer, the average business doesn't know. They hear that, but they don't know what that means, and they don't know whether they're in compliance with their drone program or package or not. So we provide insights to them as part of the overall solution to keep them compliant and really satisfy their need to really not have to care about that. From a sustainability standpoint, this shift has the opportunity to be a significant boon for somebody like us at Drone Nerds. Because as you move away from foreign dominance into US-based manufacturing, as I said earlier, that mix shift likely improves margins for us overall, given the lack of leverage that some of the current larger manufacturers that are foreign in nature enjoy. Now, if it doesn't happen, we have good relationships there with those particular OEMs, and are a significant part of their strategy. So from a sustainability standpoint, we win if it becomes heavily burdened. We win if it becomes unburdened, and we enjoy the benefits either way.
So here's an interesting one from Melissa Scott. He said, "Can you explain the discrepancy between your stock price and companies such as Unusual Machines, UMAC, or Red Cat?
Yeah, what a great question. If I had that answer, I likely would not be sitting here. Um, so I might turn that answer around and ask the investors, can you help me understand why a company that has over 100 million in revenue in the drone space enjoys a very leverageable position with its position and with significant growth and capability isn't valued significantly higher than it is. I don't. I think it's probably one of the greatest dislocations I've seen in the market, maybe ever in my career. And that's I'll try to avoid being the whiny CEO that says his company is undervalued. Because I get it, every one of us say that, but I do think there is a demonstrable evidence to suggest that we are woefully undervalued relative to the market comps.
There's a number of people that have asked what we expect our stock price to be by the end of the year, and I'm going to just let that answer cover that, Scott. But here's a follow-on, and this is from Steve. As you execute the 2026 growth plans, what financial metrics, other milestones should we as investors be paying attention to compare XTI relative to other public drone and aerospace companies?
Well, I mean, certainly our overall operating performance and results. One of the things that you see in other drone companies is that they give guidance around revenue, and then they talk about profitable revenue that'll cover their operating divisions or units or subsidiaries, and then they talk about their overall corporate overhead, and they talk about when they're going to get to cash flow break even at the corporate overhead level. Many of these guys that are showing significant revenue are still not profitable. What we're suggesting through our guidance is we're going to be profitable at the holding company level. And we're going to ultimately, and we're going to be at a position where we're sustainable from a cash flow standpoint. So we will cover the administrative costs of operating this business with this business. And so that is something you should be looking for. Now that's an evolution. We're coming from a position of having to pivot and bring the cost structure down. We're making big moves and dents into that, but that will evolve through the year. It's why we're giving annual guidance, not quarterly guidance at the moment. But we'll continue to talk about revenue. Certainly each quarter we'll give you some color around that revenue. We'll be doing segment reporting. So we're looking at, even under SEC guidance and regulations, what are the right segments for us to report on. We're moving Drone Nerds from a public or a private company into a public setting. So there are some things that we're in process of evaluating exactly what the guidance will be in the breakout of the revenue. But look for that. And then, certainly metrics like revenue per employee. That's a very classic metric that's in this space that you can use to evaluate us against others.
Okay. And then this is kind of a comment and a question from Robert. From what I see, we're looking at growth in the long term. I've invested for the duration. Would also like to see some short-term growth in a positive direction. Will we be seeing positive cash flow in the near future as well?
Well, in my world, the near future is over the next year. It is as part of our guidance. We've certainly indicated that. So I guess the simple answer to that question is yes, you will see that in the near term.
All right, and this is a question from Clint. He said, you talked about growth coming from expansion of Drone Nerds enterprise business and getting into military. Can you talk more about the military strategy and how XTI wins in that space?
So you always look to first and foremost leverage your strengths, right? And I mentioned this in the presentation that the military is very, very focused right now on opportunities with regard to commercial off-the-shelf solutions. They increasingly want to move away from R&D efforts. They've not moved away from it completely, but they are generally moving in a direction away from funding R&D type efforts. What that means is they're really looking for industry to bring them solutions that are already, shovel ready, shall I say. And so because of our situation, where we sit, with insights and capabilities, we've got the ability to bring commercial off-the-shelf solutions to the military, in partnership with others, bringing bringing development along ourselves. But initially it'll be in partnership with others. And so, expect us to be a great resource that will help facilitate the military's movement into and embracing of this whole area of COTS. Because we also have our tentacles into the drone dominance program and others, we know what's happening out there. So we will be opportunistic. We've not factored any military into our growth numbers, but we do expect to see some reasonable and meaningful movement in the area of the U.S. federal government. They are the number one customer. So let's just be honest about that. And you'd be loath not to be pursuing the number one largest customer in your sales territory, if you will.
All right. Here's a question from Sam on some of the press releases recently with the board. You've announced several new board members as recently even as this week. What do these new directors bring to the table?
Well, if you note, Clint Weber, who we submitted to shareholders at the end of December, brings a deep experience in managing money. So he's been running funds for a long time, but more recently he stepped in as CFO and part owner of a military drone company. So he is in the military space and with solutions and insights that are incredibly valuable. So he's already helping with introductions, relationships, areas of cross-pollination. So very active. Jonathan Ornstein, who we just announced, just a stalwart in aerospace and aviation generally. Run airlines for a long period of time. He was very early to the eVTOL investment space. He worked closely with United in that. He is the hallmark of Jonathan's career is that he has been on the bleeding edge of aviation or aerospace technology development. Drones is a very significant area focus for him. He's an M&A stalwart and has built businesses, transformed businesses, run them at the highest level, and really unbelievably connected in the entire world of aerospace and aviation. So we're thrilled to have Jonathan join us, and we've got some significant additions to the board that I'm very excited about.
All right, and then I think we've gotten through most of the questions here. One final question here is really kind of some other questions about the military that I think you just answered, Scott. So with that, Scott, I think I'll turn it over to you for just some final comments, and we will analyze everything. In case we missed you, we'll be putting together a Q&A document, and we will be answering any questions you submitted. So it's been really busy in here, and we're trying to keep track. But with that, we want to end right on time. So Scott, I'll let you close this out.
Great. Well, thanks, John. And again, I want to just express my gratitude for those of you that joined us here today. Obviously, this is a significant moment in time for XTI as we go through this transition. And just to reiterate a few of the highlights that I covered. The market that we're embarking upon here with in the vertical space, in particular with drones, it's large and it's growing but fragmented. This notion that OEMs, that value is shifting from OEMs to and from hardware to solutions is really a critical point that I'd leave you with. Number two, that enterprise and government customers need trusted partners to integrate, operate, and future-proof their drone programs, and the companies that own the customer relationship, that integration and outcomes are positioned really well to really be the beneficiaries of that durable value and value creation as these markets expand. So we're excited. We're excited about where we are, where the opportunities are taking us, and look forward to further communication with the shareholders. And again, appreciate the time here this evening. Thank you.